Synthetic Thursday here on Pre-Market Prep, and we have a ton to cover. All about the Fed. What's the Fed going to do? What are they going to say? What are the implications? We have a hot take to discuss with you about that. Earnings, nothing. Few downgrades. Got to talk about the war. Where's it going? What are the stocks doing? What is oil doing is the question. Joel Kulina, 835 for Wedbush Technology and Media Trading. And yes, I got it right. Let's get things started. Pre-market prep right now.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Okay, choppy session, but you know what? We're up 8.5 handles at 60.47. The buck down about a dime, 98.28. TLT building on yesterday's gains, up 30 cents, 86.80. USO, not what you want to see here for inflation, up 11 cents, 82.41. GLD and silver, not moving much today. We have Bitcoin futures up $145, just over 105K. Let's just get it out of the way, Triple D. Sorry about your Oilers. Boy, the Panthers are good, and that goalie,
They're good.
I mean, unbelievable.
They just play playoff hockey perfectly. They've won back-to-back championships. They were there the year before. I mean, they just know what they're doing, and they just do whatever it takes. They grind you. They hold you. They do whatever it takes. They're really smart about it. I mean, Barkov is just draped over McDavid half the series, can't get it going. And you know what? It's 2 years in a row. It's just disappointing. You get there 2 years in a row and you're like close again, and then you don't win. And it's 32 teams in the league. It's hard to get there. I remember the Tigers, got there twice and they lose both times too. So it's like, you get there, you think this is our year, and then, it's just the same disappointment. It's just a matter of, when it happens. It's tough. So, you're disappointed, but, you just got to forget about it, move on. It's all. Don't talk hockey for a couple months.
Okay, I got my Detroit Tigers t-shirt on. Supposed to go to a game tonight with Tarek Skubal pitching, but I don't know about the weather here. Got rained out this morning, got thundered out at the pool today. All right. I mean, I guess we got to start the show with a war update. And I think the update is there's really no update here. Trump is talking about possible involvement. Israel's continuing to do what Israel does. And, you mentioned this yesterday, oil. I mean, it's still staying elevated. I still think I don't think this is going to be as quick as everyone thinks here. So that's my war perspective.
I think it sounds, when he's talking about, evacuating, when Trump's tweeting out to evacuate, unconditional surrender, all this stuff. It's right now, we didn't get de-escalation. We didn't get escalation. We kind of just held last night, I would say. And if you look at oil, it was up substantially because I think everybody thought an attack could be imminent here. Obviously, it didn't happen. U.S. isn't involved here yet. Oil's come back down a little bit here, but obviously you hope that, there's going to be peace talks. There's going to be a ceasefire. They're going to figure this out, in a way that less people can die. But oil doesn't think so. And I mean, oil is really ramped up and holding here steady. So I think the war trade still continues to go on. Obviously the war trade is just oil stocks along with your defense stocks, Lockheed Martin, General Dynamics, NOC, AVAV, LHX, RTX. Those are the big six. So I obviously we're hopeful that, it's going to end peacefully here, but those stocks have all been bid up fairly substantially. They're still holding bids here this morning too. So I'm not sure that, just because obviously you just didn't get involved last night, I'm not sure they're not going to get involved. It still sounds like it's just a timing issue, which is scary thought.
I have the ill feeling that we're going to be talking about this for a long time here.
I think so.
I
don't think it's going away anytime soon, unfortunately.
Nope. And
just do technicals on oil. Maybe you can go to the USO.
I mean, I got the USO here, and it's just it's been look at this consolidation in the U.S. So also with oil, we've been in a trading range, and if you look at it from a trading range perspective, 83, 84. Has been the top of the trading range, of course, in 22. You did get I'll be watching this area, but the fact that it's holding its bid right here to me, it's just hard to be a fader under these circumstances. And so that's it. What I think we also should talk about is, oil is a big component for businesses, and no more important than the airlines. And look, UAL. I mean, this is just taking a hit since the most recent military action is taken. They have a lot of overseas travel. Hard to be. I mean, and also like, do you want to hop on a plane right now to overseas right now? There's just so much going on. So I think these airlines, man, I'd be cautious here. Long these airlines. One with the oil situation, and two with the unrest.
Yeah. UAL, DAL, your two biggest international carriers. LUV, Southwest is some domestic carriers, so it doesn't get hit as hard, but just keep that in mind. Cruise lines, those could be an issue as well. We do get an upgrade, I believe, here this morning. Is it an upgrade of NCLH? Oh, no, it's downgrade. NCLH downgraded to neutral at Argus. I wouldn't want to own these stocks right now. I mean, if we do get into a war situation, these stocks probably go down. Like if the U.S. gets involved, these stocks probably get hammered. So we don't know if the U.S. is going to get involved, but we're all about news anticipation. A lot of writing on the wall here that the U.S. may indeed get involved, and I would think these stocks are no touches for that reason as well. So staying away from those stocks, Delta, United Airlines, especially if you're doing the airlines because they got a lot of international business. But all the airlines all together, just staying away from.
Yeah, that we pulled. I mean, you see the big bar when we're looking at charts, and just to keep this simple for people, not that familiar with technical analysis. When stocks have like big runs, and then they get a big red bar. Let's just go the example here for Delta. Everything was fine. Delta was flying high, right? And January, actually put a double top January and February. And then that February big red bar on the monthly, didn't even like paused at the monthly low for February, down again in March. The reason I'm saying that is here you have a triple top in Delta, you got the big red bar, you got a little bit of digestion here. I mean, that's a warning. That's a warning sign. So that's it. That's it for the airlines. Let's talk macro here.
Yeah.
And the Fed. What's the Fed going to do?
I mean, there's no chance that they're going to lower rates here at this meeting. There's going to be language and talk of language. We had Blue Putnam on the STN network there yesterday, who had an excellent presentation, and he gave the case why they could potentially lower rates in July. And it was a strong case. And I'm looking like, wow, and he thinks the Fed's going to lower rates sooner than we think. He thinks it's probably more like September, though. And he thinks the reason it's going to be September is he believes that the economy is going to start going south. I believe that as well. The reasons for that is he thinks tariffs are going to be an issue, but not so much for inflation, but just to slow down purchasing. People, obviously, it's a tax on consumers, and he thinks that could show up in the second half. So a lot of the same things I've been saying. I've been saying that I don't think the Fed's going to lower rates at all this year. There's only like a 12% chance, I think, of that happening right now by the Fed tool. But the reason I've been saying is I think the tariffs are going to be inflationary and push prices higher. He's going a step farther and saying the tariffs are going to be an issue where people are just going to buy less stuff. And because of that, the economic growth is going to slow in the second half, and that's why they're going to lower rates. So if you think about it from that perspective, I could get on board with that, where we actually have lowered rates when we start to see economic numbers starting to come in weaker. So that's like a good, laying out the land here. I do think the second half is going to be tough for stocks. I've been saying I think we could hit all-time highs in June. This war thing is putting a little bit of a hindrance on that potential trade because obviously we've been down the last couple days with the war. So, maybe that scenario is off the table. As you get new information, you obviously have to adjust your thinking. We've come a long ways here. I do think that tariffs are going to, I agree with Blue. I think tariffs could be an issue for the second half, especially once we see where they land. That July date of the 90 days kicking the can down the road is coming, folks. It's coming rather quickly here now. We're only 12 trading days away from it or something like that. So keep that in mind if you're buying stocks here. It's been easy sledding for 2 months, but at this point in time, I think I want to be like having some cash. I'm up to 40% cash in my long-term portfolio because I really believe that we've come a long ways. We've sold some stocks, recently. Just been lightening up along the way because we've had such big moves. I mean, 20% in 2 months. It's been an awesome move. S&P is basically back to the highs. Q is basically back to the highs. IWM still weighs off the highs, but IWM's been the perennial underperformer that it is. But I think for today's meeting, Joel, I think the Fed probably just stays the course. I don't think we get a lot
Oh
of
yeah,
language
yeah,
change.
and
I don't think
yeah, I can summarize his thoughts a little bit too. He's talking about the unemployment data has evolved to a point where a rate cut may be warranted. Also, inflation has come down to reasonable targets. That may be, another reason. Another thing he pointed out is that we're a service economy to some extent, and a little services are a little bit more insulated. You have seen some of these companies willing to absorb some of the tariff costs to soften the blow, not to lose customer share. But one thing that you can't deny that is that tariffs are tax increases. They're going to
they are.
disrupt
It's a
supply
tax.
chains. They're going to slow world growth and U.S. economic growth. They're going to do that no matter what you say, whether it's inflationary or non inflationary. It's going to have a very negative impact on U.S. growth and world growth. So the Fed is in between a rock and a hard place. What and I made a comment last night in the chat, and I'm like, wow, the 6,100, we pulled back. We could, we're at the turn for an expiration and everything. But can you imagine what this market would do today if he just hints at a July cut? Just hints at it, just a sliver.
He's
This
not going to do
market,
that.
you don't think so?
No. He's staying the course. I mean, the one thing about Powell is he's very steady as she goes. He doesn't, change his opinion quickly. He's very data dependent here as well. I don't think so. I think there's no language change here today. I don't see any reason, like with so much uncertainty coming, and that tariffs coming here eventually. I think, especially when the July date comes, there's just too much uncertainty for him to start changing language at this point in time. So I don't think he does it at all. I think the market kind of expects that. But again, I don't know what the hell the market price is in. They price nothing of the bill on the solar stuff. So I'm going to say, again, this is the dumbest market in the history of the stock market. It's made up of a lot of high frequency traders that just obviously trade the headline and that's it. There's not a lot of anticipatory trading. So it's hard to, say what's priced in and what's not priced in anymore. I think that whole theory of the market prices in 6 months, 9 months out is completely dead now. Maybe it held water 20 or 30 years ago when institutional money managers drove the bus, but they no longer drive the bus. It's driven by microsecond high frequency traders. So, which just, are trading headlines and obviously making markets. And they don't give a crap about, anticipatory trading. So I think there's some institutions that still do anticipatory trading. I think it's a great way to do it. I think we're doing a lot of that in the STN room, anticipatory trading, where we're trying to anticipate headlines and trying to get ahead of them. But I think there's just, so much lack of knowledge in the market prices. So it's hard to say this market price is anything out.
Dennis, if you were programming your bot for the Fed meeting today, I have an idea what kind of comments that I would look for if I would. I'm going to give my programmers a call here at the break. Um, I would say that we are satisfied with. We are becoming more comfortable with it, inflation coming down and being more under control. And then he comes back and says, also, we're keeping an eye on unemployment and starting to show some concern. Something like that. And like, oh, the boss will just be like, bye, 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 bye. But I have been, Blue kind of caught me off guard because I've kind of been in your camp, Dennis. I'm like, slow and steady wins the race. I don't think we need to go up. I don't think we need to go down. I think we just need to hold steady. So it'll be interesting. We are going to get that clip together for you guys from Blue. I mean, the guy's incredible. He comes with his PowerPoints. I don't think I could ever do that in 1,000 years. But we'll get that out around, and you guys can disagree or agree. If you have any comments on it, you can certainly share them with us. I just want to talk about the overall market here for a second, Dennis. Go back to the SPY. We had like a 515 pop back over 600. We came back down. I mentioned it, a choppy day, and it just kind of feels like, tug of war ahead of the Fed. But got hit a little bit yesterday. Good day on Monday. New high for the move. Coming back and quad. What just a strange thing. We have the Fed today. Quad witch. We're day off tomorrow. Everyone gets the day off with pay, and then the quad witch on Friday. So a lot of different factors playing
And
in here.
especially with the slower options week, obviously here. And you know what? We are just in a wait and see. Let's going back to the overall market here. This market is in wait and see mode. We're just consolidating steady as she goes, and they're waiting to see escalation or de-escalation. It's the only thing that matters right now. So before the Fed, if we didn't have the war going on, I would say the Fed is a big talk. This is going to be huge for the markets here today. I think it's a nothing burger. I think we'll get some chop. But I don't think we're going to get a big move in either direction. One, because I don't think Powell's going to really change much language. And two, is everybody's just glued to international, television here right now to see where this war is going.
I
So
mean,
that's where we're at.
I mean, if the U.S. drops a big bomb in Iran, I mean, that's not going to be good. That's not going to be good for the market. The war ended, continuing is not going to be good for the market. I mean, just from a historical perspective. So great rally, off that April low, sitting up here at 600 in the spider, 6,000 in the S&Ps. 3% off all-time highs. If you were blanking in your pants when we went down, under 5,000 in the S&P, we come back up to 6,000. It's always a good time to take a look where you're at, see what your long-term goals are. Blast above 6,200. I mean, what Craig Johnson has, 7,000 for a target on S&P.
Yeah.
I think there's a lot of things we're going to have to overcome here to just blast even
But
to
the market
all-time
likes
highs.
climbing a wall of worry. And,
It
being
does.
short this market has been a way to lose a lot of money. So, as much as I think the second half is going to be tough, I'm still not short this market right now. This market has, just been resilient, unbelievably resilient, even in the face of war. So you got to give the market that. Lots of individual stock news here. I know we didn't have a lot of earnings. We can talk ACB, but I'm not sure anybody cares. I guess we could get it out of the way. It was the only company to really report. Lazy Boy reported last night. Not going to talk.
Oh, Lazy Boy did? No Lazy Boy story today.
No Lazy Boy story, and it's hardly moving. Aurora Cannabis is down significantly here this morning. It did report earnings of grabbing them, and my system is slow. Lost 24 cents. On the quarter, the sales were a slight beat at 63 million. I mean, this cannabis story has just been such a tough story for a long time. Yes, these stocks have rallied since April, but a rising tide lifts all ships, and the market's been straight up. So that's more why seeing some of these cannabis stocks bounce back as opposed to company fundamentals getting better. The valuations never made sense on any of these companies, and that's come to roost here hard in a big way here now. The all-time high on Aurora Cannabis now $1,500 a share. It's $5. Story for all these companies is over.
Yeah. Okay. Next, let's move on to Washington once again, and we had a great discussion on this in the pre-market prep show in the STN room about the Genius Bill passes. Not unexpected, right? And there's implications for a lot of stocks. Some good implications and some bad implications. I'll go with the good first here. Circle. I mean, a IPO. Great timing for all this stuff. But what's good for some is bad for others.
Well, and we should give the news here. So this bill does pass. It was expected to pass. So this is not a shocking move for anything. But again, the market that prices in nothing, which I've been arguing for a long time, CRCL is ripping higher on it. So maybe CRCL is going to go up anyways, just because it goes up, it seems like every single day. But it's moving higher. It's up 2.5% here right now. So that's moving higher here. The one trade that could potentially be flying under the radar is we got this headline a week and a half ago about stable coins, about Amazon and Walmart potentially using stable coins. And Visa and MasterCard got absolutely hammered on that headline. That's been forgotten because the market quickly forgets everything. But they've bounced back a bit, but I just wonder, if we're going to, if this, if this bill, it still hasn't passed fully here yet, but if it does, I mean, is that good news for Visa and MasterCard? So I am short some MasterCard right now, looking to add to it potentially here on this pop. I just don't know if this trade's flying under the radar or not. Nobody's talking about this. Zero people talking about this right now. But I just think like we were hitting Visa and MasterCard because we were worried about Amazon and Walmart doing stable coins. Well, this bill doesn't help that, like for Visa and MasterCard. So I don't think this is good for Visa and MasterCard. So I'm actually surprised stocks are not down on it, but maybe it's because this market just doesn't look at anything like that. So I'm just thinking outside the box, and I could be wrong here because I'm not that close to this story. I don't trade crypto. I've never used a stable coin in my life. I just know that 3 days ago I saw Visa and MasterCard get hammered on that potential headline that Amazon and Walmart were going to use stable coins, and now we get a bill that's going to be good for stable coins. Putting two and two together, not with a lot of knowledge here, I don't think this is great news for Visa or MasterCard.
JP Morgan, as one of our chat members puts in there, they're pushing a coin token too, which is considering Jamie Dimon's initial stance on this. But once again, let's just go back to that, that warning shot, right? The big. It's not on the monthly yet. I got the daily up here of both Visa and Mastercard, so you can see how correlated these stocks are. You could see how they reacted after the initial news came back. And then, as you said, that the market forgets about everything. La la la, we rally back here. But it's really important. I mean, you got a double top in Mastercard off that bill. The day you got a double top 2 days later at 360 in Visa. So it's trying to recover. And Dennis, you talked about I can tell when you're looking at trades from a short term perspective, and then when you're talking about a long term perspective. When you have a thesis like this, it's not going to play. Maybe it's not going to play out today or the rest of the week, or maybe a week or 2 months. How do you trade that? How do you keep an eye on it?
You could put a small position on, and sometimes what I do is I put a small position on just to keep my eye on it. I use this in my trading. It's like, oh, I'm going to watch that. So I'll put a small position on, a position that's really meaningless in my big scheme of my account, like percentages of my account, just keeping it really small. I think it's a good idea. Like, even if you have a really small account, you could just buy an odd lot, like a small amount of shares or short an odd lot or something like that, and it just keeps an eye on it. It's something, if it moved 10% against me, it's not going to move the needle or anything like that, but allows you to keep your eye on it. So I've always used that strategy, is sometimes just have a small position, just keep your eye on it. And if you start seeing, oh, this is working, it's a way to not forget about an idea. So I've often used that strategy, and I did take a little small short Mastercard for that reason, like keeping my eye on it. And then if it starts to work, and you're like, oh, people are catching on to this, maybe there's something there. I want you to give me the technicals on Mastercard and Visa, because these two stocks have been two of the best stocks in the last 20 years. So take off the short term, trading glasses here just for a second, and just look long term on these companies here. So we're just breaking it down. We're doing a little bit more longer term stuff. First, before
Okay.
Joel does the technical, I'll just give you the fundamentals. So MasterCard, which, at one point in time, it's always trade expensive. It's still trading 35 times forward earnings. So this stock is expensive. It's a staple. It's a cash cow. Everybody uses MasterCard. They've been unbelievable. Visa's 28 times forward earnings. So Visa's a little bit cheaper. But just, thoughts here, with Visa, MasterCard. I don't know. I'm just thinking I just think there's that opportunity here where people are missing this trade. So give me the technicals on Visa and MasterCard.
I'm just gonna give I'm just gonna go to the monthly. I'm gonna give you a number where I think as long as and I know it's $17 away, but we're talking about a $570 stock. The low for this month is 552.51. Let's just ballpark that 550. I think is a higher low over the last 2 months, so technically not much damage here. 550 is probably a big psychological level here. So right now, I think bulls are still in control until you breach that 550, where and I'm not just talking a spike down to 545 and back up. I'm talking like instead of it being bid there, offered there with sustained closes. So I think if you're a long-term shareholder, that's what you're looking at in MasterCard. If you want to boil it down a little bit more, I mean, it's got to get back half of this move. It's got to get back over these two highs. It's got to fill the gap in the short term, and I think that will lead to the monthly candle. For Visa, same thing. Two higher lows on the monthly. You're looking at a monthly low at for this month at 345, $12 away from that. If you're leaning on a short, you got sellers are lining up at 360 here, at least in the last two sessions. So that's what I'm looking at long term and short term. You did get a red candle here in Visa in March, and you got more of a red candle in April, but we all know what went on in April. So let the daily action play out, move into the weekly, then the monthly. Jobless claims, Brent. Does anybody care
Full
about
disclosure before
jobless
we move
claims?
on, I'm short both these stocks now. I'm short some Visa too.
Okay, thank you.
Woo! Triple D. Does anyone care about jobless claims?
Yeah,
I don't
well, I
know.
don't want to get
Probably
picked
not.
off, so should I go wide?
No, because
You
then
should
you
always go
complain you have
wide,
to
I
put
Dennis.
went
all your
wide.
orders back in.
Wide. Move the bids and offers out. I don't want to get the high frequency traders picking me off here.
How many clicks does it take you to do that?
One. No two. Boom, boom. Like done within a second. Go wide. Cancel
Love it.
all orders, it's called. The cancel all orders button is your friend. I use that a lot. Not every day, but whenever there's major news, it's like, okay, first of all, get my orders out of there so I don't lose money. And then secondly, go try to figure out how to make money with it.
About 20 seconds here till jobless claims data. We are expecting weekly jobless claims 246,000. We are expecting continuing jobless claims 1.94 million. We also are going to be getting building permits and housing starts. If you want to talk about the data point nobody cares about, it's probably that one. Few seconds here, folks. Standing by to break this news.
Survey
Market
says
not reacting.
Survey says nothing.
I'm delayed here on my data. Not seeing anything yet.
Survey says still waiting. Survey says
Still
we're
waiting.
down one tick.
Market is not reacting. Maybe
housing
the data is
starts
delayed. Here we go.
1.26 million versus 1.35 million. Permits 1.39 million versus 1.42 million. So housing
jobless
starts
claims right in
slightly
line.
light.
Jobless claims right in line. 245,000 versus a 246,000 estimate. Continuing claims also right in line. 1.945 million versus a 1.94 million estimate. Now we're leaking just a little bit here in futures. I don't know what the market's reaction means here, but pretty much a nothing burger on our weekly jobless claims data point.
Yeah. Yeah, I don't see much here either.
Can I trademark leaking in the market? Didn't I originally come up with that term, we're leaking? Or was that yours, Dennis?
Oh, yeah?
Is it just a pre-market prep term? We're leaking.
Leaking is everybody's term, I think. Market
But
that's going down. I could claim some things, Joel, but I'm not going to claim leaking.
what would you claim?
I think that's a market term.
You know what Dennis claims, which I came up with?
What?
Fastenal, the nuts and bolts of the economy.
The nuts and bolts of the nuts and bolts of the market. I don't know. We've come up with a few things. I can't. It's too early in the morning. I'm too depressed.
I know. I think I'm giving Triple
I'm in
D
full depression here today.
an upgrade. Yeah, I'm giving you an upgrade
We'll make
for
it Triple D.
your mood because I mean, but whatever. We won't bring it up.
I'm short.
The bar was low for the Oilers. Let's just say.
No, it wasn't. They were favored, but we won't talk about that.
Actually, when the start
Okay.
of the year, they were favored to win the cup.
Oh
They
my
were the
God.
favorite.
They were
I was
favored. Yeah, they were
And then
favored.
they
trying to,
realized
you
they don't have a
know,
goaltender, and everybody started getting off that bandwagon. So it was a good season. Let's not talk hockey ever again.
Okay,
Ever again. It's over. Nucor raises guidance. NUE this morning coming out. They come out trying to give you the numbers here. Raise announces guidance left. Trying to get the inside scoop here. Nucor expects second quarter earnings to be in the range of 255 to 265. Analyst estimates were closer to 230. So it's a bump up in guidance. That's good news. Nucor is lifting. That's good news. Hey, look, a piece of good news for my long-term portfolio because I have Nucor in my long-term portfolio. I got whacked in Sarepta, whacked in First Solar, and now I get a piece of good news. Like 2 days in a row. Usually bad things come in 3. I guess that was the Oiler loss, so that was the bad thing. So now we got Nucor popping here a little bit. Joel, technicals, NUE.
But remember when we were out last week, and remember there was some kind of news about imports or something, and they were just walloping this stock. It was a week ago today, and I remember you were trading it from the short side, and it was just kind of news, and I was kind of like scratching my head. I'm like, I don't know, is this good news? Bad? I mean, is this bad? Did they have it down like $5-6 or something like that? But short-term news put a double bottom in. Rebound high, are we there? Yeah, we got a good number. Rebound high, 125.56. That's buffeted by a 125.75 high. I guess that would make that the high. Sneaked over 126 in the pre-market. If this move is for good, well, then we're gonna hold. We're gonna hold right here and keep on going, and then not much on the dailies until the 129 area. Dennis, I just want to go back to this Sarepta real quick because I was looking at it. I was looking at it. And I'm like, I'm gonna wait, and I waited. So I don't I'm looking at. I have very little biotech. I mean, could all the sellers find? I'm going to wait for a monthly green candle in this thing. If it gives me a monthly
There's no
green,
reason to be a hero here.
okay.
And Sarepta is it's at a point where it's almost speculative. There was a Mizuho analyst that said even if you lose the drug that just obviously 2 people died from, he still thought it was worth over $30 a share, even without that. But I don't know. I'm not that analyst. I know Martin Shkreli thinks there's a lot of value here still too, but I've got a piece in it. Just became a lot smaller, so I got dinged in it pretty hard. So once bitten, twice shy on Sarepta for me.
Okay. All right.
Yes.
So
Yes.
Brent is busy working in the background there,
Joel's
and
camera not working.
right. Yep.
Okay.
I've actually got several emails regarding this, but I'll go to our trusty producer Brent, and Brent, you tell us where we going here.
I think let's try Joel Kulina doesn't have a camera. He thinks his mic's going to be working fine. I think let's give it a try. We won't have him on camera, but it'll be like a fun
Sure.
radio show.
Sure.
All right, here we go. All right, cool.
We are on the line with Joel Kulina, managing director over there at Wedbush Securities, technology and media trading here. Joel, can you hear us?
I can hear you. Can you guys hear me? I guess is the $1 million question.
We got you.
Oh,
We got you, Joel.
yeah,
Perfect.
yeah.
Perfect.
Thank you.
I'm
Thank you.
going to throw my IT team under the bus for this one. Yeah, they blocked the link this morning for some reason, but that's the I guess the life and the increasing need for cybersecurity, right? It never
They
stops.
blocked the link from
Right.
us.
I know.
Our
I
link
don't know.
safe.
I don't know what kind of cookies you guys have coming or what, but yeah, we're
Only good cookies, chocolate chip and tasty cookies. So no worries here, Joel. Joel.
Oh,
let's
real
just
quick, the
talk-
reason they did that, Joel,
Go.
is
Yeah.
because they didn't want to bring down the Wedbush servers while you were
Yeah,
because
exactly.
Yes, because people tuning in from all over the world, they didn't want to do that. Go ahead, Triple D.
Let's just start, one with, the macro environment here. Lots to think about. Fed Day, obviously everybody's going to be glued and see what, Powell has to say. But everybody is also looking what is happening internationally with the tensions in the Middle East. Is the U.S. going to get involved? Are they not going to get involved? The unconditional surrender tweet from yesterday had a lot of people spooked, but then nothing really much happened from a US perspective overnight. People are like, well, maybe it's going to be on the sidelines. How do you approach first, let's give us a lay of the land here on the S&P. We'll start with the SPY. Like how do you approach it with so much headline risk here, Joel?
Yeah, I mean, you hit the nail on the head, and you even kind of left out. It's also a holiday shortened week, and
Yeah.
there's been a lot of red dots. People not logged on, and or at least have the long weekend penciled into their plans as well. But I mean, the market's just kind of been trending at this kind of Spider's been S&P's been stuck at the 6,000 level. Q's been kind of stalling a little bit. And I think rightfully so. I think the easy money on the long side has clearly been made, and it's been the right companies leading us higher. Especially within tech, it's been the AI trade, which has just gone gangbusters to say the least. You have had names like Meta, Microsoft hitting 52-week highs as well. Names seeing real tangible revenues, from AI. Continue to kind of see, underweight long only, and managers kind of continue to kind of regross in those names. Think Oracle, think ServiceNow, and I mentioned Microsoft earlier as well. But it's a tricky backdrop. I mean, I'd say for the bulls right now, clearly it seems like the U.S. might begin offensive participation in the conflict between Iran and Israel. So that's going to be the wild card. And then obviously you mentioned as well, we have the FOMC today. The Fed's clearly, but it's widely expected they're going to leave rates unchanged. But again, I think this is we're going to get a really first look at the dot plots since the tariff chaos kicked off. Just 2.5 months ago. It feels like 2.5 years ago. So I think it's going to be very interesting to see what the result is of that. What does the market do with the dot plot? Just shows one potential cut. And that obviously, if that means the Fed's not impressed by 4 straight soft inflation reports, could be a little bit worrisome, right? Especially as the fear is that tariffs really won't kind of leak into the economy starting in end of this month and into the summer. So yeah, there's a lot of moving parts, and I think guys are trying to keep it tight. They're running lower gross at the moment, and like I said, easy money's been made right now in this market, and I think guys are just trying to be a little bit more intelligent and tactical around their trading.
How about the state of the AI trade? NVIDIA, I have the chart here. Little trepidation over earnings, came back, trying to make a new all-time high. It seems like AI and some tech, rising interest rate environment, they do well. Falling interest rate environment, do well. Talk about the state of the AI trade.
Yeah, I mean, I'd argue it's the problem is you got to go back about 6 weeks. So today's conversation's not as say relevant, but I think it still holds true. You go back 6 weeks, obviously what happened in April with the tariffs, the momentum unwind, but positioning in this group of stocks, especially mega caps, the semis, it was probably the lightest it had been since late 2022, early 23. And I think I actually touched on it last time I was on the show. And what happened after that period? Tech went up 19 out of 24 months. So clearly positioning is not as light and clean as it was 6 weeks ago. But man, the vibes are nothing but positive, and you're seeing stocks continue to trade higher. Look at AMD, right? You had a little bit of a sell the news reaction last week on their June 12th event. Some disappointment. And look where the stock is today. You had a bullish note a couple of days ago out of Semi-Analysis. There was also another broker making comments. I'm losing my mind, but hinting at them going to win. They are going to win AWS as a customer as well. So these stocks, dips are being bought. Dips are shallow. I mean, NVIDIA obviously, 150 is the big level to watch. And in my opinion, it's going to be the next large cap name to make highs. Whether or not it's not going to be today, clearly, or probably Friday. But I think in the near term, it's a stock that wants to go high. And even look at Broadcom, right? It's been an absolute rocket ship from 140 to 260. Again, the dips are just so shallow, which means there's just real institutional support for these winners. And I don't see what's going to derail that trade right now. Even if we do get a major escalation in the Middle East, unless you see a huge inflation shocks, you're going to see people gravitate towards the themes that have been working and where companies are benefiting and they're seeing real ROI in their investments.
Okay, let's talk about a stock you like, a cloud company, focuses on analyzing data. We all love our data. What's up with Datadog here? Nice move off the April low, consolidation, and I guess your opinion, consolidation to move higher for the dog.
Yeah, no, I mean, look again, pull up that chart. Last night it closed above its kind of its little range it's been stuck in. I think these are the kind of charts you want to be looking for, right? And there's also been a natural desire from tech investors to look for stocks that aren't at 52-week highs already. And Datadog kind of checks that box. So 120, clearly there's some real support there.
Yep.
They had great earnings back in early May. They sounded fantastic at JP Morgan a couple of weeks ago. They really just kind of reinforce growth's being limited more by internal capacity than actual demand. AI native customers have already begun scaling rapidly, and more importantly, arguably, why enterprises remain early in their adoption, but are expected to catch up. And again, technically, it just looks extremely clean. I think you want to be looking for these stories. And again, the big multi-strats, the Citadels and the Balyasnys, the 0.72s, they're always looking for pair trades. And one name that's been on the other side of that's been MongoDB. Had that big gap higher post to print. I think it was up 12% T+1.
Woo!
It's given it all back.
Wow.
So again, I think you want to stick with those horses that are showing relative strength consistently. And again, keep it simple. Like why there's clearly not a huge urgency or desire to kind of defend stories that have even a little bit of hair on it.
Well, talk about relative strength. Oracle's had the gap and
Yep.
go since earnings here, had the big move, and then the second day had just as big of a move. I don't know if anybody saw the second day's move coming here. Has pulled back in a little bit here the last
Yep.
couple of days, but the strong get stronger, the weak get weaker, and there's none that are stronger than Oracle right now.
Yeah, and I think there was a little bit of a little bit trepidation going into the print. Guys weren't really to take a ton of outside print risk in Oracle, given their track record. They've walked people off the cliff time and time again. But I mean, I'd argue, and I think others would as well, that this past quarter they sort of are showing that they've crossed the inflection point that they've been promising for years. They have a backlog-driven runway, accelerating cloud mix, differentiated cost kind of performance, and that it's winning blockbuster AI training. They are going to benefit from this, the sovereign demand for the AI in cloud race, arms race as well. And they're just entering a structural growth phase. Record high RPO. I think their OCI growth was something like over 70% as well. And again, and what are the bears going to pick at? Well, maybe their model's becoming a little bit too heavily reliant on capital intensive, lower margin, GPU training workloads. But again, it's a pretty easy argument if you ask me, right? Heavy investments are still being rewarded in this trade. Look at Meta, for one example of that, and Oracle again, a little bit of pullback off its highs. I think more of a function of the market, but long onlys were underweight this name, and this is sort of the green light, the type of name that you can own for the next 2 to 3 months.
Yeah, Meta, Cantor Fitzgerald are raising the price target to 807 here today, and that's been a monster here too. We don't have a lot of earnings on the docket here for this week. Obviously, short week with the holiday. We do get Accenture on Friday. Just want to get your thoughts of ACN going into the print.
Yeah, I think Accenture and the IT services companies as a whole, right? They're just the poster child for the macro uncertainty, the negative impact that's had on discretionary spending, Doge, where these companies actually are in terms of Gen AI positioning as well, and just lackluster, organic growth as well. So Accenture reports on Friday morning, and pull up a chart for your viewers as well. Look at a name like Booz Allen, right? Massively exposed to the federal government, obviously a victim of Doge. Stock blew up, when they reported probably 3 or 4 weeks ago. And again, it's just been bouncing along the bottom. Just no one's willing to step into these names. So for me, the Accenture, the bull argument's just weak, right? People will point to the support of backlog, book to bills hanging in okay. There's valuation support. But again, valuation support for tech companies that aren't winning typically doesn't hold up, and that's a very weak argument. So I think it's a name, you're not involved or you're shorted versus the likes of IBM or Oracle, which are or ServiceNow, which are seeing real benefits from AI, and just kind of spin that. Looking for a funding short within the software space as well. Look at Adobe. Again, a stock that just blew up last week, or I won't say blow up, just terrible earnings last week. It can't catch a bid to save its life. Its yearly chart just looks depressing. And again, their inline-ish print just really did nothing to change the bull versus bear debate there. And this is where expectations were extremely low. But again, just I think a name like Adobe, bears just continue to worry that AI monetization, probably is going to remain immaterial in the near and medium term. Second half comps are getting tougher there, rising OpEx. And then you have a competitive overhang from the likes of Canva. Meta has announced a lot of, AI digital kind of creative tools as well, which is going right after Adobe. And even Canva, they announced a small acquisition yesterday. The name's lost. I think Magic Fire maybe. But again, that sort of just even reinforces the bear case for a name like Adobe, where there's a lot of uncertainty, a lot of overhang, and it's like, why bother? There's just too many clean stories in tech right now to be bottom fishing.
Yeah, with the Accenture too. Just we were talking about the IBM chart there, and IBM ripping, and they're not, similar companies, not perfect, but if you're looking for a catch up trade there, Accenture due to report. Let's just do a quick look at the Mag 7 here.
Yep.
And their rankings according to Joel Kulina here. Some doing better than others. You wanna do a quick rundown of the Mag 7?
Yeah, I'll do my best here to be quick. Meta is still number one, and it's not in my opinion not even a close race right here. And even for a while, they've seemed to be the number one company to benefit from AI. The top line's going to benefit from being able to monetize it across all their platforms. You saw the stock trade higher, when they announced their intentions with, also implementing ads into WhatsApp. The bottom line's going to benefit from lower inference costs. Again, and now you even have the Scale AI headlines and deal from the last few weeks as well. And there's just very limited revenue nor structural angst here in the entire story. And now investors, both long only and hedge fund guys can just kind of dream on what the multiple and EPS can look like moving forward. But a very straightforward story here, Meta. Nvidia's moved up to number 2. I don't think positioning is a max long like it has been for most of 24. But again, I think most agree on EPS visibility. Clearly, demand and visibility beyond 25 and 26 continues to kind of shape up, and again, there's just very little room right now for there to be much controversy in Nvidia.
And what about the dogs? What about the dogs?
Which one? Down on the bottom. Sorry, I'm ranting a little bit. Number 3 is Microsoft. Yeah, number 3 is Microsoft. Number 4 is Amazon. In my opinion, there's a lot of hair on Amazon, right? It's AWS is still the key to the story, but man, there's a lot of other stuff going on here. The retail consumer tariff exposure, just a lot of moving parts in Amazon. But then Google still number 5. I personally like Google. I thought their I/O conference back in mid-May was fantastic. Hence, you got that move from 150 to 175. But I think tactical bulls feel pretty good about Q2 upside. But again, you're still going to have search Gen AI debates kind of. They're going to be perpetual around the Alphabet story. And then bottom of the pile is Apple. I probably said that last time and the time prior as that as well. There is just nothing to get excited about here. And more importantly, there's just really limited catalyst to drive the multiple higher here in Apple. And that was a big part of the move higher the last few years when you saw the stock just kind of re-rate higher. It was all multiple. It wasn't revenue expansion. It wasn't innovation. It was just sort of the multiple kept creeping higher. And it was sort of a head scratcher for many.
Joel, I wish we had more time with you. You said fantastic topics today. We've been on the line with Joel Kulina, Managing Director over there at Wedbush Securities, Technology and Media Trading. He will be working with Dennis tomorrow because he doesn't have a holiday. So he'll be co-hosting with Dennis on Pre-Market Prep. The man with the greatest name on Wall Street, Joel Kulina.
Yeah, exactly. Can I throw one more to your viewers? One more real quick?
Of course.
One more, just the trade desk. So the TDD, obviously they are a stand to negatively impact from the Amazon Roku deal that hit a couple days ago. And I know the bears have been saying that Amazon continues to chip away at the trade desk moat. So that's a chart. Look at it. The stock is just struggling. It's gone from 80 down to 67. It just shows there's no incremental buyer here in the store. And I think, if you're looking for shorts, and you think the market's toppy, I think you want to look for stocks that are very stories that are vulnerable to a market correction.
Thank you,
Awesome.
Joel. We'll be
Cool.
dialing you up real soon. A fan
All right,
favorite
guys.
here on PreMarket Prep.
Take care.
Thanks, Joel.
Bye.
Thanks.
Okay. Is intern around? Intern in the STN? Is he? Intern, are you
What a
around?
call yesterday in the STN room.
Yes.
He's like, I'm getting long some MRVL. Did he buy calls? I think he's saying he's buying
I don't.
options.
Yeah, I
Isn't he?
think he did. I think he did.
Wow, that's a good call because Marvell is having itself a morning here. They did have an AI event yesterday. Every analyst in the world reiterating their buy rating on this, it seems like. Rosenblatt reiterates buy. Cantor raises price target to 75. Stifel reiterates buy. Benchmark reiterates buy. Loop reiterates buy. UBS reiterates buy. Wolf Research reiterates buy. So a pile of buy ratings from MRVL stock is having itself a morning, I tell you. I am long MRVL as well, up 4.47% here this morning. Looking good. It's been sleepy for a while, but starting to get a little bit of momentum going. It was an AI darling at one time and has went from blessed to the other word, and we're starting to climb its way back here. Thoughts technically MRVL.
Well, when he mentioned this, I looked at it, and what just jumps out to you, this thing, is that consolidation around 70. And I said, it needs a catalyst. It needs some analyst love. I think it was yesterday or the day before. I don't know when these notes came out. I think they've been coming out over the last couple of days. So usually when I hear 6 analysts all say the same thing, I immediately want to sell. But on this day, in this stock, I would rather say, hey, I want to be patient. If this thing ever gets back down to 70, 70 and a half, I think it's a good looking trade. You're going to get into a gap area today, gapping into a gap, I believe. The highest level, got a great number here for you, folks. If you don't care about the March 7th high, 72.33, maybe you care about the March 6th high. March 6th high will get you into that gap area at 75.77. So, congrats to intern out there. Great call. Let's we got a few minutes left here. Let's finish up with some more analyst ratings. NCLH, we already covered that one, right?
Well, we briefly said it, and I said it's concern for the war trade. Argus is downgrading it to neutral here this morning. I can go see if I can find you some color on this note.
Okay.
Argus downgrades Norwegian Cruise Lines to hold. Not a lot of color actually coming from here. So I know it's analyst John Stasnak is downgrading it. So I don't have the color on that one. But you can give us a quick technical here on it, Joel. NCLH, I mean RCL. Viking VIK has held up very well, better than all of the other ones really here. I mean RCL too. RCL's been best of breed for a long time. NCLH, CCL have been worst of breed for a long time. Yeah.
I don't like cruises. I'll just do unless you go to Alaska. If you haven't gone to Alaska, you got to go to Alaska. But for this NCLH, I mean, you've got a hit since 20. I mean, I don't know. I just look at this 3-day low here, that low on Friday, 1761. You're not there yet. Also, that coincides with the 50-day moving average. I believe at the top of the show, we did have some news on Affirm, and that is up $1.31. I don't think it was an analyst ratings, but Affirm is catching people's eye here. Trading higher. Wall Street Journal reported investment arm of Prudential would purchase up to $500 million of consumer loans for the company. So that's what's causing the spike in Affirm. Your rebound.
What about
high,
technicals on this one? This has come back.
Nothing until 62.98. You got Confluence here, your 4-day high, 62.37. So there you go. There's some technical, and also you've gotten half back of this recent decline. So big high, big level there for Affirm.
Upstart also is its brother-in-law here, starting to show a little bit of life with Affirm this morning. So if Affirm keeps going, keep an eye on UPST. That can move as well. We got Citron talking stocks. Citron?
Yeah,
looks like go-go.
Left just posting on GoGo. He's saying, I'm not short here. No opinion at this level, but noting that the stock is up 100% since March 11th. No meme, no hype, just forgotten value. As for the obvious shorts out there, silence says enough. We're just busy hunting the next double as always. Citron with some positivity here, it seems, on GoGo.
Yeah, so they posted this back on March the 11th, and it's more than a double is what they're saying here since they posted it. So it was a good call by Andrew Left over at Citron. Stock up 9% because Citron. Is this the reason that it's up another 9%? Is just
Let's see
that
when the price action started happening.
Citron posted and talked about it again? I mean, holy, they got some power there.
The stock was moving before Citron tweet. Let me just double check that.
Maybe it was already up.
Left tweeted this Left just tweeted this like a few minutes ago. So yeah, the stock was already moving over the $13 level before this happened.
Okay, well, it's moving up even more here. I mean, GoGo's been breaking out here.
Did they do anything besides like internet and airplanes that Elon Musk is taking over
some
with
other
Starlink?
businesses. Like,
with Starlink?
I don't know, to be honest.
I don't think so. I don't think so, but I think that's their thing.
Okay. All right.
I'm not overly excited about GoGo.
What?
Wake me up before you go.
I knew, Dennis, you
Wham.
are. Oh my gosh.
I'm a
He
huge
is
Wham
reading my.
fan.
We've been doing this show too long, Dennis. Because
That's how you know.
Because when Joel Kalina mentioned Booz Allen, I'm like, what the hell is that symbol?
I threw it. I knew you didn't know it. I threw it up in the chat. I know them all.
And I'm like, BOZ.
I was like, no way Joel will know what Booz symbol, BAH. I'm like, there's no way Joel will know that. So
sometimes I can figure them out. I get the BA. I know that's Boeing. But the H, I don't know where the hell they came up with that. But
Booz Allen
anyway.
Hamilton. That's why. Oh, we just lost Joel.
Joel leaves? What just happened? He's on mute again. He's on his mute trick. He doesn't know what he mutes, but he mutes somehow, and he doesn't figure it out. So, okay. Well, final thoughts here today. Obviously, Fed is going to be watched. I don't think they're going to say much. I think you're going to chop around a lot. I think the more is the situation in the Middle East. That's really what is going to be the market driver here this morning. Oil still holding on to gains. You know, we didn't get a lot of escalation here overnight, so you'd think that it would leak, but it's still holding on here. So I think there's a lot of traders still positioned in the war trade. We've been playing it too in the STN room as well. So I think that's the trade that continues.
All right, Triple D. We'll keep talking about this stuff in STN. We'll see y'all over there. Have a good day on this pre-market prep, everyone.